Hey folks, welcome back to the channel. Today we'll be giving a little market update and to set some expectations for a lot of you who are just getting into the stock market or to investing for the very first time. The stock market has roared back from its lows in March. The Dow Jones Industrial is at a net positive for the year 2020. People are asking the question, can this bull rally continue, or are we headed for another retest of the lows we saw in March? And with the stay-at-home orders, the citywide shutdowns, a lot of people are now working from home, might have a little extra time on their hands, and added into the crazy returns and gains we've seen from mid to late March to now. We've seen an influx of retail investors and a lot of first-time investors, people opening up new accounts with brokerages, putting money into the market and trying to buy the dip, trying to make some money on the market. From earnings statements released this quarter, E-Trade has said they have seen over $18 billion of net new retail assets in the first quarter, and retail accounts increased by 329,000. Schwab saw more of the same, with a 42% year-over-year increase in new assets, and over 600,000 new brokerage accounts were opened, over 280,000 in March alone. So there is no question that more people are jumping into the market. Obviously, this money is not very much when compared to the giant institutions and the market movers, institutions and funds with a lot more money. But to the casual person, it seems like a lot of people are jumping in. And if they did get in shortly after that dip in March, they would have seen some pretty good returns. But like I said earlier, we've reached a point where we're all wondering what's next. Analysts, some are saying that we may see a retest of the lows. Others are saying due to the Fed intervention, the monetary fiscal policies and stimulus packages that have been passed and may be passed in the future, we've wiped out a lot of that uncertainty in the market. We've provided liquidity to stabilize companies, to give confidence to the people, and it's just up from here. Analysts have called it both ways. It's really hard to predict exactly what's going to happen here. But I do want to set some expectations. Now, this is not financial advice. Please seek out financial advice from your own advisor who will be able to speak to you on an individual basis. But from a general standpoint, with some states opening, the economy looks like it's about to get back on track. Will it be able to fully recover? Will we see that V-shaped recovery that's been talked about for so long? Or are things just going to get worse? Is a second wave going to come in, reinforce those shutdown, stay-at-home orders, businesses that were open, close back down, people protesting even more against these orders? No one really knows. But what I do want to set is expectations. Some people say the first one's free. That may or may not be true, but if you did get in at the right time, you're feeling good about yourself, seeing 20 or even 30% returns from March, what seems like easy money, don't get too complacent. Stocks could go up, could go down. It's the funny saying, but it's true. Just because you've gained 20 to 30% doesn't mean you can go right ahead and lose that all in a week and have that wiped out or more if things don't go as planned. Now, to set that expectation, we've also seen new retail investors coming in asking, how do I trade stocks? How do I put money into the stock market? What stocks to buy? Should I buy funds or individual companies? Are tech stocks good? We see retail might be coming back. Is that a good investment? And even on Twitter the other day, I saw some posts from those Twitter philanthropists giving away, money on Twitter to people in need. And a lot of those comments, a lot of people were asking how to get on stocks, what apps people are using, what can I do with $20, etc. And I do think it's a great thing to think about the future. Set aside some investment money, build up money that you can use down the road into retirement or if you need emergency funds in the future. But if you're just starting out and don't have much money to invest with, I don't want you to get unrealistic expectations right off the bat. It's very easy to make and lose money in a volatile market just because it swings wildly in one direction any given week or a day. And if you're on the right side of things, it's looking good for you. But on one side of the trade, there's also dozens and dozens of people who are on the other side who maybe bought a little too late or sold a little too early and missed out on those opportunities. Now, we've seen a lot of articles and videos that are made to help people get started. We all know those titles: what to do with your first $100, how to invest $100. And to be honest, a lot of those videos end up with the conclusion that a great way to invest those first couple $100 is in yourself, either buying books, investing in businesses, learning a new skill, something that you can invest in yourself to gain the knowledge and know-how to make more money down the road. And also beginner guides on how to start trading stocks, what stocks to buy. We'll show you some easy ways and some trades that you can start making. But to set these expectations, you're not going to make a decent amount of money with $100. It's a great start, and people love to say, invest consistently and often. You start out with $100, maybe $100 a month for the next 30 years. That will definitely give you a sizable investment. But if you're just looking to put $100 in right now, this is not a lottery ticket, right? We're not at a casino unless you are actually gambling that money, either gambling in a casino or with the market, doing some very risky trades. That $100 is not likely to turn into thousands or hundreds of thousands of dollars in a short time. And also, if you're really struggling right now due to the job cuts and unemployment numbers rising like crazy, it might not be a good time to invest. You might really need that money to help pay for things now before you're going into debt or you can't pay off those credit card bills or your loans and other things like that. Make sure that's taken care of. Work on an emergency fund after that, and any money you have left over can go towards investing, maybe some safer investments for the long term. This is money that you don't expect to be using in the next couple years at least. And another thing I do want to say is on the other side of crazy gains is that a lot of people are betting on the market to go down once again, which, if we're all paying attention to world events and what's going on right now, isn't really crazy to see. But we have to be careful to not get too caught up into that. Just because things are closed down, we see airlines, restaurants, retail, entertainment maybe completely shut down, not making any money at all, does not mean that the stock is going to keep on going down and down and down. The stock market doesn't necessarily reflect current economic conditions or even the current economic conditions of certain companies. And just because things are expected to go down in the short term doesn't mean that the company will do very well in the long term. Right now, we see tech stocks are a hot buy, with companies such as Amazon, Facebook, Google, Snapchat reaching their all-time highs. They've gained a lot over the past couple months, whereas the travel and entertainment industries have been hit hard. I'll use an example here of Live Nation. They've dropped significantly from their all-time highs. Even if the economy is opening up, a lot of states and cities are using a phase-out method to begin opening up, with lower risk or lower traffic areas opening up first, and getting to those later stages where large gatherings and sporting events and concerts will be allowed to continue later in the road, given certain factors such as cases and new deaths, things like that. But with Live Nation, a company that's involved in running concerts, selling tickets to those larger events, we've seen most, if not all, major events canceled for the foreseeable future. And although they might not be making any revenue right now, we can't expect the stock to just keep on going down to zero. Right? Even if they are closed, even if they're not making money, even if they're losing crazy amounts of money, the stock's not just going to automatically go down to zero. There could be days of huge losses or days of huge gains on good news. Maybe there's hints at things reopening. Maybe states are allowing concerts back again. They've given a timeline to how they plan on reopening the economy. Also just looking at Disney, they've shut down their theme parks, their cruise operations, their movie productions. A lot of their scheduled movie releases have been pushed off to the end of the year, but their stock is still trading, in a certain range. I've seen it between about $90 and $110 bouncing around between there. You can't expect it to fall to zero because everything's closed. Obviously, Disney's still a very strong company. A lot of people believe in the company in the future, in the long term, 5, 10 plus years from now. They think this could be a good investment to get in and hold for the long term. But on the other hand, stocks are not always guaranteed to go up. We've seen some cases already of companies declaring for bankruptcy or closing down, with JCPenney, Frontier Communications. Some of these stocks have been battered and beat over the past couple of years, and this pandemic could just be the final straw that broke the camel's back. They've completely shut down. Their stock might actually go to zero. If you take a look at something like JCPenney, sure, it's a penny stock right now, right? We can buy thousands of shares, but it's not going to go up. It might never go back up. They might go to zero. That company might get wiped off the planet forever. We just don't know. So as with investing and the market, make sure you're doing your own due diligence, do your research, take a look at the company's financials, and think about what your outlook on it is. Take a look at what analysts are thinking, look at their earnings calls, their transcripts, read into it, and really think about the future of the company and also how the current volatility will affect that, right? Day trading is very hard to do, especially if you don't have much money. There are day trading restrictions, and also if you just have a couple hundred or $1,000, you're not gonna see a lot of gains just day trading. You might be up 5% one day, and might go right back down the other day. It's very volatile. It's really hard to see exactly what's going to happen. You can make a lot of educated decisions and guesses, but at the end of the day, nothing is certain. No one can really predict what's going to happen to the market. And there's just the huge battle going on right now between monetary fiscal policy, world governments, and also just the virus itself. How is it going to play out into the summer and into the winter later? Into the summer and the later half of this year, no one really knows yet. I mentioned this in a previous video, but I think it's good to pay attention to the countries that have already reopened and see if they're facing problems such as a second wave or more infections after they open, or if things are slowly returning to normal. We just have to wait and see. But in the long run, as a lot of people suggest, it's good to start investing and saving money early. Invest consistently if you can. Put aside some money either every week or every month with every paycheck, whatever you can, and save for the future. Stocks are not guaranteed to always go up, but historically they have, and barring a total economic collapse and completely failed governments and policies, I don't see why we won't see stocks higher than they are now 10, 20 years down the road. But thanks so much for watching this video. Let me know if you have any questions or comments down below. If you liked it, enjoyed it, please give this a like. But stay subscribed if you love the channel, love the content. We'll see you in the next one.